welcome back to this week's episode of the Vancouver Life Real Estate Podcast. Today is a very special episode. We have the one, the only, and our returning favorite mortgage broker, Mychal Ferrera from the Bank of Montreal. Mychal, welcome back to the show.
Thanks for having me. Great to be back.
Right on. Well, today I'm going to give a little preamble on kind of what we're going to discuss here, but we are effectively going to do basically a temperature check here. We're going to check in with your business to see how it's going. You know, you do a lot of volume, so it's really good for us to get a good sense of what's taking place in your world. We're going to touch on some rate cut expectations for September. What are the banks forecasting? We're going to look here. What does it mean for buyers and sellers? Should they continue to wait? Should they get better rates? Should they go in now and avoid competition? We'll take a look at some insolvencies. We'll also touch on whether you should be going variable in today's mortgage environment or if you should be going fixed, what's more popular and why. And then maybe we'll touch on a little bit of recession fears. But before we get there, let's talk about the elephant in the room, which is inflation. So inflation rate came down and came in at 2.5% in Canada and 2.9% in the US. This has, depending on who you read and who you're following, but the vast majority of economists are now calling for a rate cut in September, potentially both in the US and in Canada. What else we saw in the last sort of 2 weeks was a jobs report that came out of the US. They were expecting 180,000 jobs. They ended up with 114,000, so a lot less than what was anticipated. That caused recession fears to go through the Korean stock exchange, the Japanese stock exchange, where they actually stopped trading. However, they've since sort of walked that back a little bit. With all that said, now it's sort of paving the way for a potential rate cut. Before we actually get into that potential rate cut, Mychal, why don't you tell us about what's going on in your world? What are you seeing? How's your business been? You know, 3 months ago when you were on here last, you noted that there was a lot of inconsistencies. So there was 1 month it was pretty quiet. The next month was, a large amount of inquiries. Then there was a ton of pre-approvals. Then it slowed down. So what's the temperature like with your group? What are you seeing in boots on the ground?
So the last several months have been quite busy, actually. And we're seeing, a lot of different types of scenarios. We're seeing a lot of people dealing with renewals. I would say that's the number one group of people. Refinancing, kind of restructuring their debt. Seeing definitely a bigger group of people that have taken on more debt over the last 2 years that are now thinking about amalgamating that on their renewals, also shopping around with rates. Some lenders, when you do have a renewal and you do a straight renewal, they don't necessarily give you the best rate. So people are getting a little bit smarter about looking around. Another one is a lot of pre-sale people are starting to come back now and get their approvals well in advance. There's just a lot of uncertainty in the market, especially because I do deals across Canada. As you see what's happening in Ontario, lots of fluctuation there. Definitely, I would say, a decent size, but not as big group of purchasers and first-time home buyers. While they are still out there, definitely it does seem like the buyer pool is a little bit smaller for sure.
I think that's to be expected when rates have been as elevated as they have. Although interesting to hear, and maybe not so surprising that people sound like they're restructuring or consolidating their debt. I suspected that would happen. Last time, Mychal, that you were on the show, we talked about a survey that BMO performed, whereby the bank found that about 70% of their pre-approved buyers were waiting on the sidelines for lower rates before jumping into the real estate market, before buying a home. Is that still very much the same sentiment, or are a lot of buyers sort of standing by, sort of waiting, hey, I know rates are coming down, so I'm not going to buy yet? Or are they looking to buy, secure that property, and then refinance later on?
I think the group that's moving is in the sub 1 million. So the first time home buyer that's looking in the 600, 700, 500 range, because there's a lot of value out there right now. And whether they buy at, 4.79 or 4.89 or 4.69, I think that they're seeing the value there. Definitely seeing that move. I think the people who are looking at selling and buying, or that second property, those are the ones that I'm seeing a little bit more hesitancy from. And they're definitely kind of waiting on the market. The biggest issue I have with that is some people are waiting to even look at doing their financing. And I think that, look, like it's okay if you want to wait. I always give the advice if you're buying a home to live in, it's got to be the right property. But definitely get your financing in order. You can always reset your rate, right? So, I have clients who I'll just roll rates for every 2 or 3 months. We just continue to drop them down, but they're ready to go and make an offer because there's definitely a lot of good deals out there. And I think that it's always best to be prepared. But definitely in the sub 1 million first time home buyer market, those are the ones I'm seeing move right now.
Yeah, I tend to agree with you. I think that sub 1 million mark also allows you to get insured mortgages, so you can get
Hmm.
even lower rates at that, from that perspective. And it's also just that's the brim of affordability in many ways, right?
Yeah.
So I think going beyond that, you'd have to have a substantial amount of equity, or like you said, the house has to be perfect. And I think many of the listings we're seeing on the marketplace right now, some are decent quality, but the majority maybe don't fit the needs of a lot of buyers that are above a
Hmm.
million bucks. And maybe
Hmm.
that's the case, as higher net worth individuals don't have to sell in these environments unless, of course,
Hmm.
they're, over collateralized or whatever. But
Yeah.
uh, we're not seeing that panic selling either. So,
Hmm.
um, okay, well, that kind of leads nicely into our next question, which is, the rate cut expectations for September. What are you seeing, and do you think the BOC will cut rates at each meeting, kind of going forward here until the end of the year? What's maybe
Hmm.
BMO's take on rates? And do you agree with it?
I don't see why they wouldn't continue to cut rates all the way through to the end of the year. They've always said that inflation is their number one core measure, and we're there. We're at 2.5% as of today. I think if that stays in the sub threes, then why would you not? I think the question is, do they continue to cut slowly or do they make a larger cut? BMO's, expectation for a cut is, probably going to be at least another quarter point for sure. But it looks like there'll be at least two cuts that BMO's predicting. I think that, this information is probably a little bit dated, but I wouldn't be surprised if we see three.
Yeah, and I tend to agree with you. I think we'll continue to see the Bank of Canada continue to cut rates, especially if employment stays, or unemployment, my
Yeah.
apologies, continues to go up. The GDP continues to be stagnant. I think, the Bank of Canada is going to have to do something to continue to stimulate, or else
Mhm.
we'll end up in potentially a recession. Okay, Mychal, so let's talk a little bit here about the pre-sale world, because largely, I think in many ways, especially if you go to Ontario, the pre-sale world has been a bit of a mess. With people taking on potentially more property than they could finance, nobody anticipating rates going where they've gone, people leaving money on the table, selling for under what the property is worth just so they can get out.
Yeah.
What's what's happened in the pre-sale world with respect to financing? Is it still the
Mhm.
same as it was going into this scenario, or have the banks sort of looked at this and said, well, hey, listen, I think we can
Mhm.
help, and here's how?
Yeah, so one of the things that I've definitely seen more of an influx in is just people who have bought pre-sales reaching out and getting their financing ahead of time. A lot of people don't know that they can get a full approval up to 3 years in advance, secure the appraisal so the value is secured against any fluctuation, hold a rate, although it's a higher rate, it's still a ceiling rate, and secure like all of their income documents. So basically, they have a firm approval and they don't risk anything. And like what we're seeing in Ontario is you bought up a lot of these pre-sales that you bought, a couple years ago have now dropped in value. You got to make up that shortfall. So, one of the things actually that I'm starting to see as well is the government had just implemented that change where you can actually now go up to 30 years amortization for an insured mortgage on a new build. So again, another reason why first-time home buyers should be looking at ways to get into the market. We're seeing people unload pre-sales at pretty good prices. And on top of that, they can now qualify for more because we can extend the amortization from the traditional 25 years to the 30 years on insured borrowers. So, I think that there's value there still. But I think if you're an existing purchaser who does not have their financing in order, you really need to do that. And we do have a program that allows you to do it up to 3 years in advance, protect your investment. And now with the government changes, it allows for more flexibility and affordability.
I think that's really important. A lot of people that, I've spoken to about buying pre-sales don't know that you can do that. And in fact,
Mm-hmm.
got caught, right?
Mm-hmm.
It's been since the bank started offering these programs, we've been echoing that to our clients, and I think it's saved saved some bacon in many ways. But anyhow, you kind of touched on it earlier here. We've been reporting on our podcast here that job vacancies have been dwindling. With that, we've seen rising levels of arrears, defaults, and corporate insolvencies. How is this affecting your world? Are you seeing a lot of debt restructuring right now? Can you talk a little bit about that?
Yeah, no, definitely. I think the large majority of people are really doing their homework ahead of renewals. They're trying to understand, like, hey, like my mortgage is coming up in January, February, March, or whatever time, and they're saying, what is my payment going to look like? And I think that's the best thing you can do. I don't think you should be waiting to get hit with that number. You should be, well educated on what that looks like. So the scenarios I've been working with my clients on is just looking at, look, like where's the payment going to be based on today's rate, right? And the expectation is, look, like if we see these cuts and we see potential decreases in rates, here's kind of like a range, like a $200 to $500 range in your payment. I would say I have at least 3 to 4 meetings a day just for that. And the people who are maybe in those variables or, in those low fixed rates that maybe have accumulated debt, we are seeing them look at restructuring a lot of their debt as well. So, I do foresee going into 25, there being a very large number of, people looking at refinancing, restructuring, because, I mean, how can you not? I mean, you're going from anywhere between a 1% and 3% rate to, a 4 plus, maybe 5% rate. So, I think no matter what, especially in the Lower Mainland, these are big mortgages, right? And even a 1% difference in rate is pretty substantial. So I think a lot of people are looking at their options and doing their homework, and I think that's exactly what you really should do.
So when you touch on restructuring debt, and people are calling, because one of the things we talked about, and I think this was, it's probably been 8 or 9 months since we talked about it, but when renewals come up, the bank is going to offer you a rate to continue on your current amortization schedule. But if I went to a competitive bank, they could potentially offer me a longer amortization schedule, which would effectively lower my rate. Is that what you mean by restructuring?
There's a few ways, right? So basically, if you are in if you're doing a straight renewal, you can't really extend your amortization. So in order to extend your amortization, you need to do some form of a refinance or a restructure, what's called a review application. Sometimes they'll just extend it. It still requires you to provide income, assets, liabilities, and run a full credit check. Other types of restructuring are just people maybe consolidating other debt, car loans and personal loans and student loans and credit cards, because they've taken on larger expenses over the last couple of years as well, right? So I think a lot of people are looking to kind of reset their debt load and put themselves in a more cash positive position where they can actually handle it. So a little bit of a mix, but I think the biggest benefit is re-amortizing. Of course, not from an interest perspective. You are restructuring the debt, you are re-amortizing it, you're basically restarting the clock on your mortgage. So, it's something you need to be aware of, and you need to have a plan to pay that down as quickly as you can. But I think a lot of people are just looking for a little breathing room for the short term.
Mm-hmm. Yeah, I tend to agree. Okay, well let's move on to interest rates here. So looking forward, knowing the BOC is going to, they've announced that they intend to drop rates 200 basis points over 18 months. We'll almost certainly see lower rates, later on than what we see now. Knowing that that's going to be the case, would you recommend to people that they take advantage of a variable rate scenario or a fixed rate scenario? And if they do choose one or the other, maybe why would you do that and for how long?
It's funny because, the variables definitely creep back into the conversation now. And with every mortgage I do, we want to have a thorough conversation on what the best terms and options are. But, I would say that the last year, like 90% of people would be taking a 3-year fixed. And the reason is because they could early renew it 2.5 years into it. right? So 6 months before maturity. The 5-year variable is looking appealing right now because obviously if we're expecting 200 basis points in cuts over the next, couple of years, then, starting at a prime minus 1%, suddenly that looks pretty good, right? So the main difference is just the initial difference in the rate, right? So you're looking at about a 1% difference between a 3-year fixed and a 5-year variable. The only part that you have to consider is, yes, while rates might come down, the question is how quickly and how much to catch up to that 3-year fixed rate. So, it not only has to meet that 3-year fixed rate, it has to surpass it for it to start actually making sense, right? A lot of people right now are just considering that math and seeing what works best. I always give the advice that, look, like, while the outlook is positive for rates and we expect the 5-year variable to continue to come down, some people prefer the devil they know, and they just take a fixed rate at the end of 2.5 years. You pay 2.5 years, whereas there's still some unknown with rates. We don't know exactly what will happen in the next 4 to 5 years. So it's still kind of up in the air. But I would say I've definitely done more variables in the last few weeks than the last few years. Actually, definitely, it's starting.
So it's
to come
becoming
back
more popular.
Yeah, absolutely. I mean, naturally, with rates looking like they're coming down.
Yeah, and I guess it really entirely depends on what you believe too at the end of the day. And maybe hearing sort of the expectations both internally from BMO, but also looking at economists. Is Canada in BMO's eyes, or is Canada likely to enter a recession, and would it be a hard one? Or do we expect that? Because it's funny, if I look at the comments in our previous episodes, there are people who call for a huge crash that's coming, and then there are people who don't believe that at all, right? And there's this big divide in terms of whether or not we'll actually enter a recession. Are we in one? Is it a soft landing or a hard landing? So where does BMO stand on this? Not that you can speak directly for the bank, but
well, our chief economist Doug Porter did a presentation just a few months ago, and their call is basically that while we see the economy continue to cool, they don't expect a hard landing. So I don't know exactly where I sit on that fence. I want to believe that that's the case, and I hope that that's the case.
I do too. I think I've been a little bit more pessimistic and feeling like we've largely been in one for some time here. Though if we keep changing the goalposts at the federal level, and the bank keeps moving things around and reweighting things, then how will we ever really know? So, but anyhow. Well, that gives us a really good sort of look at maybe what's taking place here in the mortgage space. Mychal, is there anything else that people should know going into the fall season? Maybe, should they be getting in touch, talking to you about rates? What would you recommend to people who are thinking about making a move?
Yeah, so, a couple different things. If you have a renewal coming up in the next 6 months, it's time to start talking about it. Find out what your bank is willing to offer. And get a second opinion. Don't wait till you're too close to your renewal, because we do expect the next 6 months to be quite busy. We do expect there to be a lot of traffic, a lot of people reaching out. So, get ahead of it. Make sure that you're doing your due diligence and asking, a couple lenders. A lot of time, you don't want to get pinned up with a renewal rate that's maybe not as competitive. And just from the outlook that I'm seeing is if you're a first time home buyer, get yourself approved and start shopping, because there's a lot of good deals out there. And we clamor for this market. Sometimes we forget what it was like, and I don't foresee us being in that kind of crazy market anytime soon per se, but we also don't know, and it could happen overnight, right? So I think if you're a first time home buyer and you're thinking about getting out there, now's a great time to get yourself prepared and start looking.
Yeah, and to that point, many of our buyers who have been in the marketplace over the last 3 months, kind of thing, we've done nearly 20 million in sales in the last 2.5 months, and the vast majority of that has come from us being able to negotiate, lower closing prices for our buyers, and getting 100,000 off, getting $200,000 off, getting extended periods of time to close, so that we could take advantage of these rate cuts that are coming as well. So there's a lot of negotiation taking place in the market right now. as opposed to the market we typically have been used to over the last decade, which has really just been a fist fight for the most part. So if I'm also in agreement. I don't think the market is going to flip anytime soon.
Mm-hmm.
We've got high levels of inventory. It's going to take some affordability, some regaining of affordability, I think, before we really start to see this taking place. But I do think it'll change in time as well. So with that said, Mychal, if people are looking to shop their renewal, if they are looking to get pre-approved, how do they find you? How do they get a hold of you?
Yes, you can reach me on my Instagram. It's just Mychal Mortgages. Or feel free to look me up on Google. You can find my phone number and my email and reach out to me directly.
Right on, Mychal. Well, listen, thank you so much for joining us again on this mortgage update. A lot of value here. And if anyone's looking to have that discussion about your renewal or about a purchase, please reach out to Mychal. I'll be more than happy to help you. And we'll see you here next week on another episode. Ciao.